Hi everyone. Today what we're doing is going to be very similar to what we did in 11.1, where we're journalizing transactions that couldn't necessarily fit into the special journals. However, now we're still doing some returns and dealing with some of our subsidiary ledgers, but this time we're dealing with the accounts receivable ledger as opposed to 11.1. We were dealing with the accounts payable ledger. We're also dealing with returns on the sales end. So that's when people are returning to us, our customers are returning to us. And there's an additional step that we have to take when dealing with those returns. So our first transaction is June 4th, granted credit to Keller Associates for merchandise returned. Now, the difficult part here is that we have to account for the merchandise returned, but also the sales tax that we charged our customers. So it breaks down the amounts for us here. So the merchandise returned was valued at $245. So our new account, sales returns and allowances, that's for when people are returning to us, that account is going to be debited for $245. Then we have to also account for our sales tax payable. That's going to be debited for the amount of the sales tax that we charge, which it tells us the amount up here is $14.70. And then we're going to add those two together to get the total. But again, the total is already provided to us, and that's going to be credited to accounts receivable Keller Associates. So that total is $259.70. Just a reminder that we're dealing with accounts receivable / Keller Associates as opposed to dash, because we need to now post to not only the accounts receivable account in the general ledger, but Keller Associates in the accounts receivable ledger. And then our source document here for all returns of merchandise to us is going to be a new source document that's called a credit memorandum. So this is credit memorandum number 28. Now on the 9th it says, learn that a sale on account to Ashton and Lindsay LLP was incorrectly charged to the account of Abraham Corporation for $623. So this is, you made a mistake, you need to rectify it. We've dealt with similar transactions in the past. So when this occurs, when you make mistakes, you do what you should have done in the first place. So in the first place, again, it says learn that a sale on account was incorrectly charged to Abraham Corporation. We should have debited Ashton and Lindsay in the first place, but we did so for Abraham Corporation. So Ashton and Lindsay is now going to be debited for $623. Again, what we should have done in the first place. And we're going to do the opposite of what we did of the mistake. So the mistake was previously Abraham Corporation was debited, so now we have to credit it to negate that mistake. All right. On the 12th, it says granted credit to Lambert Schools for damaged merchandise, $206. There is no sales tax when we're dealing with schools, and so sales returns and allowances, anytime we are receiving a return, sales returns and allowances is going to be debited. So $206, there's no sales tax. And then accounts receivable / Lambert Schools is going to be credited for $206. And we have our source document, which we're going to use anytime we receive a return. That's a credit memorandum. So credit memorandum number 29. And lastly, it says, found that a sale on account to Keller Associates was incorrectly charged to the account of Carson Properties. So we should have debited Keller Associates in the first place. That's why that's going to be debited. We accidentally previously debited Carson Properties, so we have to do the opposite of that to negate it. That's why Carson Properties is credited, and our source document is M62. Now, our next step is going to be to post these transactions to post to both the general ledger and the subsidiary ledger, the accounts receivable ledger. So very similar to what we learned in chapter 4. The difference now is that we also have to post to that subsidiary ledger for our specific customer accounts. So we have sales returns and allowances. That's going to be in the general ledger. So sales returns and allowances. The date here is the 4th. So the 4th. And this is going to be from the general journal, page 12. So G12. This is going to be a debit for $245. Debit and a debit means we add. So $2,487.60 plus $245 equals, all right, updated balance, $2,732.60. We'll put 4130 back up at the top. 4130. Next we have sales tax. So sales tax payable. Again, the date was the 4th. From general journal, page 12, so G12, we are going to debit $245. Credit and a debit means we subtract. So we have $648.10 minus $245 equals $403.01. So here, $403, sorry, that's 10 cents. And then we put 2120 back up at the top. 2120. All right, so next we have accounts receivable / Keller Associates. So we're going to start with accounts receivable. So accounts receivable, the date is the 4th from page G12. This is going to be the total that we credit. So the total, $259.70, $259.70. We have our debit balance, which is $9,187.75. We're going to debit, credit, subtract, minus $259.70. It's going to give us $8,928.05. And then we'll put 1130 back up at the top. But we're also going to add that slash because we have to post to our customer page in the accounts receivable ledger for Keller Associates. So sorry, here's Keller Associates. So the date is the 4th still from page G12. This is also a credit for $259.70. The previous debit balance is $1,716.40. We're going to subtract $259.70. Again, debit, credit, we subtract. Updated balance is going to be $1,456.70. And then we put 140 to the right of the slash, 140. Okay? Now, we're next going to post these mistakes that we made in our accounts receivable ledger. So Ashton and Lindsay, here we go. We should have debited this account in the first place. So on the 9th from page G12, we are debiting $623. Debit and a debit means we add. So $684.25 plus $623 equals $1,307.25. We'll put our customer number 120 at the top. And then we have Abraham Corporation. So on the 9th from page G12, we're crediting that account. $623. We never should have debited it in the first place. So $1,649.50 minus $623. equals $1,026.50. And then we'll put 110 back up at the top. All right, next we're moving on to sales returns and allowances. That's back in the general ledger. So sales returns and allowances. The date here is the 12th. So sales returns and allowances on the 12th from page G12. And this is going to be a debit for $206. So debit $206. Debit and a debit mean we add. So $2,732.60 plus $206 equals $2,938.60. And we'll put 4130 back up at the top. Then we'll go to accounts receivable. The date here, I think that was the 9th, right? Sorry, that was the 12th. So on the 12th from page G12, this is going to be a credit for $206. Debit and a debit mean we add, so $8,928.05. And then we're going to subtract $206 equals $8,722.05. And then we put 1130 back up at the top. We're going to put a slash here because we also have to post to Lambert Schools. So we're going to Lambert Schools. The date is the 12th from page G12. It's a credit for $206. Debit and a credit means we subtract, so $3,490 minus $206 equals $3,248. Sorry, it's $84. And then we put $150 to the right of the slash. Lastly, we're going to post to our last transaction on the 26th. We're going to Keller Associates. That is going to be, again, on the 26th from page G12. We are debiting $598. $598. We are adding, so $1,456.70 plus $598 equals $2,054.70. We'll put 140 back up at the top. And then lastly, Carson Properties. The date is the 26th from page G12. We have a credit for $598. Debit and a credit mean we subtract. So $1,647.60 minus $598 equals $1,049.60. And then we put 130 back up at the top. So again, journalizing is a little tricky, but once you have the journalizing done, the posting I think is fairly easy, just a little tedious, but it's something that we've done a lot. So the posting part definitely shouldn't be too difficult for you guys. Again, if you have any questions, feel free to reach out and have a great day.